Hi and Assalamualaikum, my name is Nur Iman Zulkifli. Today I'm gonna present part of background, which is background of Brothers Chili Sdn Bhd. This company name is Brothers Chili Sdn Bhd. The company is running by two brothers in Kedah. This company was founded in January 2021. This company also focus on local, state and several near states like Perlis and also Penang. The chilies farm are about 1 acre with a range 3,000 to 4,000 trees in the farm. The existing capital owned is 20,000 with additional 50,000 loan from the bank. For the business assumption, we have business level assumption, revenue assumption, funding assumption, operating expenses assumption, personal expenses assumption, account receivable assumption, and also last but not least is tax assumption. For the business level assumption, it will take 3 months for our business to reach our goals. And for the revenue assumption, we're gonna sell 2,000 to 3,000 kilogram chilies per month. For the funding assumption is from the personal saving and also the loan. For the operating expense assumption, it will have high expenses when starting and will slowly decrease when further. Next is personal expenses assumption, which is we have 2 to 3 workers for 1 acre farm. For the account receivable assumption, the customer should settle payment in the same week. Last but not least is the tax assumption. 10 to 15% tax is expected every month. So for the next part is detailed budget. So we have 3 timetables, which is first is variable cost, second is fixed cost, and the third is revenue. For the variable cost table, the requirement that we have is chilies seed, NPK fertilizer, transportation, labor, machinery, fuel and repairs, electricity 10% of variable cost, interest on variable cost 5%. So for the total variable cost that we get is 13725.25. For the fixed cost table, the requirement that we have is land charge for 1 year, machinery depreciation, equipment and tools, also the taxes. So for the total fixed cost that we did calculate is 2520. And for the last timetable is revenue, which is the requirement is only chilies, and the total is 64,000. Budgeting is the process of creating a plan to spend your money. This spending plan is called a budget. Creating this spending plan also allows you to determine in advance whether you will have enough money to do the things you need to do. The company estimate for variable cost is 13725.25, which includes 8 items to run the business. Chilies seed we purchase for 20 gram, which can plant up to 4,000 plants. For fertilizer, we use 15 NPK fertilizer for yearly growth with purchase 2 bag with cost 300 ringgit. For 1 acre, we managed to keep transportation for just 2,100. With 2 labor with 4,500 each a year is sufficient. Fuels and repair take 375 for operating in 1 acre land. Interest up to 15%, around 17,000 a year. For the fixed cost, we managed to get 18,000 land per year, which costs 1,500 per month. 1 acre land can plant up to 4,000 chilies tree. With the 3,100 of machinery depreciation a year, equipment and tools are also need to purchase when starting the business. Taxes is up to 250 ringgit. With estimated around 4,000 kilogram chilies, we can get revenue for 64,000.
Okay, Bismillahirrahmanirrahim. So for forecasting of Brothers Chili's Sdn Bhd, so for the sales of chilies increase for every month, and for 2021 at June, they have Carnival Expo that help to boost more sales, and at June they got their highest sales in 2021. And for 2022, the sales of chilies increased up to 15% better than 2021. Okay, next we go to the profit or loss. Revenue and for the net sales in year 2021 is 16,400 ringgit, and increase in 2022 which is 67,600 ringgit. And the total cost of goods sold for 2021 is 27,000 and 33,500 ringgit for 2022. Gross profit for year 2021 is 33,400 ringgit, and increase in 2022 which is 34,100 ringgit. Total operating expenses for year 2021 is 18,600 and decreased to 17,600 ringgit. For operating profit is loss, which is for 2021 is 14,800 ringgit, and 2022 is 16,500 ringgit. And for the net income for 2021 is 14,800 ringgit, and increased by 16,500 ringgit in 2022. Thank you.
My name is Muhammad Hamidi, and now I will explain a little bit about the break-even analysis. So the break-even analysis, we need some data for us to calculate the break-even quantity and break-even sales point. First data we have is selling price per kilogram, which is 16 ringgit, and variable cost, which is VC, divided by Q, which is quantity, we have 3.43, and the fixed cost we have 25,250 ringgit. Okay, for the first one, we want to calculate the break-even quantity. For the break-even quantity, we use formula FC per P minus VC. FC is fixed cost, P is price, minus by variable cost. We get 2,008.75 kilogram, which means the break-even quantity, based on the break-even point in units for the following year for 1 acre, Brother Chili's need to sell more than 2,000 kilogram chilies in a year to reach the break-even point. Okay, next is the break-even point. The formula we use is FC, fixed cost, plus BE, break-even quantity, times VC, variable cost. Okay, so after we use the formula, we get RM 32,140 and 01 cent. Okay, so which means for the break-even sales point in the year, the business need to sell RM 32,140 in a year worth of chilies to meet the break-even sales point. Okay, next is for the balance sheet. Balance sheet, it indicates an account of total asset and total liability of the farm business, revealing the financial solvency of the business. More specifically, it is a statement of the financial position of a farm business at a particular time, showing its asset, liabilities, and equity. Okay, for the 2021, Brother Chili's Sdn Bhd current asset show with total cash is RM 50,000 ringgit. Account receivable from customer total up to 12,500 waiting to be settled, with inventory in store with total 9,800 worth of products, and prepaid expenses total 3,900. For 2021 only, total current asset for the business is 76,200. Okay, for the non-current assets, we have plant and equipment, which costs 2,900, and land is up to 20,000 with current price. Building and transportation both is 10,000 ringgit. Total of all non-current asset is 32,900. If current asset combined, the total of all asset is 109 26,100. Owner has account payable, which is 22,000 for current liabilities. For non-current liability, owner has loan balance for 30,000, which is loan when starting the business, and also has purchase balance, which is 10,000, and total non-current liability is RM 40,000. Okay, for the owner equity total is 33,000 after sum up owner investment and profit. Okay, for all the total liabilities and owner equities, for 2021 we got 95,000, and for the 2022 we have 89,000.
Assalamualaikum and hi, I am Muhammad Haikal Hakimi and I will continue to present on financial ratio. The current ratio indicates a favorable run of a farm business and it reflects a business liquidity in a year time. For net working capital, the amount of 54,200 shows our company has larger amount of net working capital and it enables us to manage our current obligation. Similarly, quick ratio shows an increasing trend from 3.02 in 2021 to 3.66 in 2022, shows we earn more quick asset than current liabilities. As for activity ratio, the inventory turnover increases from 2.76 in 2021 to 3.19 in 2022, which implies strong sales and sufficient for inventory. The rise of account receivable turnover ratio from 5.12 in 2021 to 5.37 in 2022 is a good sign, since the higher the number, the better the position is, because that shows customers are paying on time and the company is good at collecting. Next, average collection period in days indicate the effectiveness of a company's credit and its collection practice by measuring the average number of days it takes for customers to pay their invoice. The debt ratio measures the amount of leverage used by a company in terms of total debt to total asset. The ratio of 0.57 in 2021 means a company released twice as much on equity to drive growth than it does on debt. Gross profit ratio is a financial ratio that measures the performance and efficiency of a business by dividing its gross profit figure by the total net sale. The gross profit in 2021 is 0.42 and is considered as sustainable and good for business. On the other hand, the net profit margin measures how much net income is generated as a percentage of revenue increasing. 23% recorded is a good number for businesses. As for return asset, 14% is a measure to predict how much profit a business earns from its capital. Let's move on to the cash flow for our company. We use direct method to calculate the cash flow statement. Cash flow management is the process of tracking how much money goes in and out of your business. This helps to predict the amount of money available for your business in the future and to keep track of any change that might affect the cash flow. It also helps to identify how much money the business will need to cover debts such as paying employees and suppliers. The net cash provided by operating activities for years 2021 is 10,900 and it decreases to 8,500 in 2022. Next, the net cash flow from investing activities collapsed from 3,700 in 2021 to 2,650 in 2022. As for net cash flow from financial activities, it reduced from 83,000 in 2021 to 66,000 in 2022. Last but not least, for net increase in cash, year 2021 recorded an amount of 90,200 and it dropped to 71,850 in 2022. That is all from me. Thank you.
Assalamualaikum, my name is Muhammad Irfan Akil. In this chapter, I will discuss about IRR and NPV. So basically, IRR is internal rate of return, where a metric used in financial analysis to estimate the profitability of potential investment. And NPV is the difference between the present value of cash inflows and the present value of cash outflows over a period of time. So for the calculation, we simply use the function of Excel and just key in the data. As the result, our business managed to get present value amounted RM 2,566, and present value of future cash flow is influenced by discount rate. With high discount rate, the lower the present value, and we keep it at 8%. Therefore, a higher NPV is better than a lower one. So our company NPV is RM 22,565. And the last one, for the IRR, we managed to get 180% investment. With the highest IRR, it shows that our company will meet the investor's minimum threshold. Okay, so for the scenario analysis, future business expansion is something we wish to do as time goes on. It is difficult for investors to invest their money on any new company due to cost increase, food crisis, war sanction and inflation. In light of that, Brothers Chili Sedian Berhad investor must be convinced with solid evidence. Investor will invest in the company with a higher internal rate of return. Therefore, with 180% of IRR will be influence the investor to receive their return in the future. Apart of that, business also can quickly grow with a little investment. As the quick ratio is high 3.02, it indicates that the business has RM 3.02 liquid asset available to cover each of RM1 its current liabilities. This show our business is stable for sustain in future.